Hello, and thank you for joining us at XM.com for this Forex Preview video. I'm Cristina Marujos. Joining me today is investment analyst Cristina Parthenidu. We'll be looking at the Australian employment report for June out tomorrow. And of course, employment is expected to have risen at a much slower pace compared to May. So what does that tell us about the country's economy?
Of course, a weaker jobs report wouldn't be very encouraging for the Australian economy, which continued to slow down in the first quarter, especially if the unemployment rate holds steady at 5.2%, as forecast suggests, which is well under the 4.5% target set by the central bank. That would suggest that the labor market hasn't reached full employment conditions, and therefore we probably shouldn't expect inflation to rise towards the 2% target through higher wage growth. Nevertheless, I think it's too early to judge, and we should rather give some time to the markets to adjust to the new record low interest rates. So probably upcoming employment reports will be more challenging and more interesting to look at.
Well, talking of interest rates, the RBA already delivered 2 rate cuts earlier this year. Of course, the RBA is rushing to keep unemployment rate down, the wage growth and inflation up. So do you think we'll see a 3rd rate cut in August?
Indeed, the RBA has been, unlike other central banks, has been relatively more active this summer, cutting rates twice by 25 percentage points to a new record low of 1% to support the economy in case the trade war continues to weigh on the global growth. About the 3rd rate cut now, I think that the central bank could proceed only if the current level of interest rates brings little change to key economic indicators such as inflation and the unemployment rate. So if the data prove that the current stimulus isn't sufficient enough to keep the economy in balance, we might see another rate cut probably between October and December.
And now the jobs data will, of course, affect the Aussie, which managed to record an impressive rally, even though the RBA kept the door open for further stimulus. So what is the outlook for the Australian dollar?
Well, I think Thursday's employment report could have a temporary impact on the Aussie. If you look at the Aussie dollar in the 4-hour chart, a stronger than expected employment report would suggest that there is no rush to further its monetary policy, likely pushing the price towards its recent peaks. Otherwise, if the data disappoint, giving more incentive to the central bank to cut interest rates, we might see another selling below 0.70 and towards 0.6965.
I see. Cristina, thank you for joining me today. And thank you for watching us at XM.com.